Welcome back to Smart Stock Sam. There's big news on this stock recently, and market is reacting as expected. But let's slow down and focus on the facts and see how they are shaping the narrative. I'll cover what's real, what's noise, and what it could mean next. For quick updates like this, subscribe and tap the bell to catch every market move on time. All right, here we go.
Right now, Rezolve AI, ticker RZLV, is at the epicenter of a financial battleground. On one side, you have a stock that just got absolutely hammered, plummeting 23% in a single session, leaving a trail of nervous investors asking, is this the end of the AI dream? But on the other side, you have Wall Street's sharpest minds looking at this exact same chart and whispering a very different word, opportunity. Today, we are cutting through the noise. We are dissecting the data, bridging this massive valuation gap, and answering a critical question. Is this 23% drop a massive opportunity? We are analyzing the gap between RZLV's $3.55 price tag and the double-digit targets set by top analysts. Is this a textbook fundamental dislocation, or is the market seeing something the experts are missing? Grab your notepad, because this is going to be a deep dive into high-stakes AI investing. Let's get into it. Let's be brutally honest. The current price action in RZLV is ugly. A 23% drop in a day feels like a punch to the gut. But here is the crucial insight. This isn't a reaction to the company's core business. It's a direct response to financing news. The market, in its knee-jerk, short-term panic, saw dilution and hit the sell button. But this is where you, as an informed investor, need to differentiate between sentiment and substance. While the stock chart shows pain, the underlying metrics are screaming a very different story. Analysts who get paid to look beyond the headlines are pointing to a 200 to 300% potential upside from current levels. They see an intrinsic value that is miles away from today's trading price. This isn't just a dip, it is a fundamental disconnect between market perception and what the company is actually worth. Forget the noise for a second. Let's talk about the institutional floor. This is where the big money puts its actual capital. The consensus average price target for RZLV hovers between $10.57 and $10.83. That isn't a guess. That is the collective intelligence of analysts like H.C. Wainwright, who just issued a $12 target, and Cantor Fitzgerald, who stands firm at $8. These aren't retail influencers. These are firms with reputations on the line. But here is the game-changing fact that you need to know. Rezolve AI just secured $250 million in a private placement from institutional investors at a price of $4 per share. Let that sink in. The stock is currently trading below the price that major banks and hedge funds just paid to get in. Historically, buying a growth stock cheaper than the institutions means you have a built-in margin of safety. They aren't buying to lose money, they are buying for the future. Let's look at how this $250 million capital raise, which gave institutions a $4 entry point, led to the stock's decline to $3.55. The immediate market reaction was pure fear of dilution. Issuing 62.5 million new shares meant a roughly 19% dilution for existing shareholders. And no one likes dilution. But we have to zoom out and understand the strategic rationale behind this move. This wasn't a desperate plea for cash. It was a calculated, growth-oriented raise that accomplishes three absolutely critical objectives. First, it provides massive institutional validation. Large institutions don't risk $250 million on a failing enterprise. Second, it provides the liquidity necessary to execute on their aggressive $350 million revenue target for 2026. You can't achieve that kind of scale without capital. Finally, it provides balance sheet fortification. Before this raise, Rezolve's balance sheet was under pressure, showing negative total equity. This capital infusion effectively cleans the slate, removing the previous financial overhang and positioning the company for its next phase of global expansion. It de-risks the entire investment thesis. While the stock chart might look like a roller coaster, the underlying business fundamentals are actually accelerating at an alarming pace. Rezolve isn't just talking about growth, they are delivering the roadmap, an aggressive 2026 revenue guidance of $350 million, alongside an annual recurring revenue goal of $500 million by year-end. This is the kind of exponential scaling that separates the contenders from the pretenders in the AI space. And this isn't vaporware AI. Their brain suite technology, the engine of agentic commerce, is already being adopted by global enterprise giants. We are talking about companies like Gap, Snapdeal, and Vogacloset. These aren't small test cases. These are massive players integrating Rezolve's AI into their core operations, proving the technology's effectiveness and scalability. But here is the most powerful fundamental shift. December 2025 was their first profitable month. For a high-growth tech company, transitioning from cash burn to profitability is the ultimate validation. It signals that their business model is sustainable, scalable, and no longer reliant on external funding for survival. This is the moment a speculative bet transforms into a legitimate investment opportunity. Now, for balance, let's address the elephant in the room. What are the bears still growling about? First, the dilution is a legitimate concern. While strategically necessary, issuing millions of new shares means your piece of the pie just got smaller. It will take time for the market cap to grow into this new share count. Second, the volatility is extreme. We are talking about realized volatility over 150% over the last 20 days. This stock swings hard and fast. If you are not prepared for significant movements, this might not be the right play for your portfolio. Finally, we cannot ignore the historical financial health. Prior to this raise, Rezolve had a history of negative net margins and a concerning total equity of negative $37.9 million. This balance sheet was in dire need of fixing, and while the capital raise addressed it, past performance does indicate the underlying pressures that necessitated such a large injection. So, where does this leave us? Rezolve AI is unequivocally a venture-style bet. This is not a blue-chip stock for your entire retirement portfolio. This is a high-risk, high-reward satellite position, a smaller allocation that, if successful, could deliver disproportionate returns. The entire thesis hinges on execution. If Rezolve can hit those aggressive 2026 revenue targets and continue its path to consistent profitability, then the current price of $3.55 will undoubtedly be viewed as an incredible entry point, well below those double-digit analyst targets. The recent crash, driven by dilution fears, might just be the market's temporary blindness to a company transforming its financial future. In summary, remember the massive valuation gap. The current price is disconnected from analyst targets that suggest over 200% upside. Consider the strategic capital raise. It was dilutive, but it fixed the balance sheet and fueled growth. Keep in mind the profitable growth. Having the first profitable month in December 2025 is a massive milestone. And finally, recognize the enterprise validation. Global brands prove the technology works. This is a venture-style opportunity. It is high risk and high reward. It is a buy-the-dip scenario if you believe in the execution. As always, this is not financial advice. Do your own due diligence. Rezolve is a high volatility play, but for those who understand the nuances of agentic commerce and believe in management's execution, this valuation gap might be the opening of a lifetime. I want to hear from you. Do you believe Rezolve will successfully hit that $350 million revenue target by 2026, or is the market right to be cautious? Let me know your price targets in the comments below.
All right, that's the update. If you want more quick fact-based insight like this, subscribe and tap the bell icon so you don't miss the next one. Drop your thoughts in the comments, and I'll see you in the next update on Smart Stock Sam.